Thank you, Mr. Chairman, and thank you to the witnesses for joining us this afternoon. For decades, the Federal Home Loan Bank System has served as a reliable source of liquidity for small community banks, credit unions, and insurance companies across our districts. By ensuring these institutions have dependable access to funding, the system has helped support local lending and expand access to credit for families, businesses, and communities. Much of this important work has taken place behind the scenes, making it easy to overlook the critical role the system plays in maintaining the strength and stability of our financial system. That is why I appreciate the opportunity to examine the Federal Home Loan Bank System today. This hearing gives us the chance to evaluate what is working well, identify areas where reforms may be needed, and consider the role Congress must play in ensuring the system remains resilient, transparent, and well-positioned to meet the needs of the financial institutions and communities it was created to serve. Ms. Naman, one of the major priorities of this committee over the past year and a half has been improving coordination among regulators to ensure a more timely and efficient supervisory process for American financial institutions. In your testimony, you discussed the, quote, efforts to improve coordination during periods of stress, end quote, between the Federal Home Loan Banks and the Federal Reserve System. Could you elaborate on the steps that have been taken to strengthen that coordination and whether there are additional opportunities to improve it?
Sure, thank you for the question. When we did our report, these efforts were really at the beginning stages. What we heard from the Federal Home Loan Banks and the Federal Reserve System were efforts to increase their engagement with each other. For example, doing tabletop exercises to practice reallocating collateral from the Federal Home Loan Banks to the Federal Reserve. Also actually testing the transfer of that collateral. We also heard about a working group that was established to increase standardization across the different Federal Home Loan Banks and the Federal Reserve Banks. The failures really highlighted a very complicated overlapping system of relationships between Federal Home Loan Banks and their local Federal Reserve Banks with different types of agreements, different types of procedures, and this working group was established to try to standardize some of those things. So we do not have an update on the status of those efforts, but we really believe it's important to continue those.
Thank you for that. Do you see a role for Congress in ensuring continued coordination between the Federal Home Loan Bank System and the Federal Reserve System?
That's not something that we had a recommendation on. Nothing is really coming to mind as a role for Congress in that. I think it was in the hands of the agencies to really continue that coordination. If additional oversight is showing that those steps are not continuing to be taken, then there could be a good role for Congress to step in and ensure that the coordination continues.
Thank you for that. Turning to you, Mr. Donovan. In 2018, President Trump signed legislation to modernize the credit scoring models used by the government-sponsored enterprises. After hearing from me and many of my colleagues, FHFA Director Bill Pulte and HUD Secretary Turner announced in April that they were moving forward with implementing these modernized credit score models at both enterprises and the Federal Housing Administration. Several federal home loan banks, including Dallas and Chicago, have already taken similar steps because modernizing credit scoring increases competition and innovation, improves risk assessment, and helps lower borrowing costs for consumers. I recognize that each federal home loan bank establishes its own collateral policies. At the same time, the banks are part of a single congressionally chartered system with a shared mission. As more banks adopt these modernized credit score models, it is important that member institutions have a consistent and predictable framework for assessing liquidity across the system. As enterprises begin accepting mortgages that use modern credit score models approved by the FHFA, how important is it for member institutions to have reasonably consistent access across federal home loan bank districts to liquidity backed by those otherwise eligible mortgages?
I think it's critical for our members to have options and for banks and credit unions, insurance companies, CDFIs to have options across the system. I know that many of the banks are looking at the Vantage Score scoring model, and I'm also aware that banks and credit unions, mortgage originators across the country are also looking at that. So we're taking steps in the right direction, but it's critically important for there to be options.
Thank you. I'm out of time.
Timmons begins by making the case that the Federal Home Loan Bank System has historically provided an important source of liquidity for community banks, credit unions, and insurance companies. That point matters because these institutions are often much closer to consumers and small businesses than the largest Wall Street banks. When a local financial institution can reliably access funding, it has more capacity to continue making mortgages, business loans, and other forms of credit even when financial markets become stressed.